Can you beat and outperform SCHD with its own top holdings? That's what we're trying to figure out in this video. And by the way, shout out to Tyler Raleigh for the video idea. Now I want to preface this video by saying that I genuinely feel bad for my international friends, the ones that are in Europe, Asia, Africa, wherever you're from. Because apparently, depending on where you live, you might not be able to invest into SCHD. Now, not having the access to arguably one of the best pound for pound ETFs in the world, I feel for you. And for you guys, doing a DIY SCHD portfolio where you replicate the top holdings might be the way to go. Or not. We'll find out. Let's get into it. Now, first things first, let's take a look at the top holdings within SCHD. As you can see in the top right of your screen, there's about 103 different holdings. I think like 3 or 4 of them are like treasury yields or like cash vehicles. But a good majority and a bulk of the portfolio are decent and juicy dividend payers. Number 1 is going to be Coca-Cola. They make up about 4.5% of the portfolio. And then you have Verizon, ConocoPhillips, Altria, Lockheed Martin, PepsiCo, Home Depot, Chevron, Amgen, and the list goes on and on. Now, the first experiment that we're going to do is we're going to take the top 6 holdings all the way down to right here, and we're going to measure whether or not you would have been better off just investing into these ones instead of SCHD as a whole. Let's look at that. And to help keep the data a little more organized, we're just going to put the information that we find out onto this spreadsheet right here. So first and foremost, with SCHD, what is the year-to-date total return? You know, their share price appreciation while taking into account the dividends that they paid out just for the past 4.5 months. So if you went all out 100% to SCHD, year to date, your total return is negative 6.04%. Let's type that in right here, negative 6.04%. Now, on the other hand, with Coca-Cola, let's see what happens. If we type in Coca-Cola right here, ticker symbol KO, year to date, you would be up just shy of 20% at 19.57%. So right off the bat, if you just invest into Coca-Cola, you would smash the earning potentials of SCHD just in the past 4 months alone. But let's go a little further. Let's keep it scientific here, right? Verizon's going to be the next one, ticker symbol VZ, the telecommunications company. Now, year to date, your total return for Verizon is positive 11.68%. Guys, I'm seeing a trend here. What I'm seeing is that if you invest into the biggest allocations in SCHD, it's quote unquote the winners so far. SCHD, just as a reminder, I know everyone can see, but just in case, negative 6%. Coca-Cola, positive 19%. Verizon, positive 11%. Let's go one more, right? ConocoPhillips, the oil and gas company. I think it's ticker symbol COP. Yes, ConocoPhillips. Now, year to date, we're talking about, negative 8.75%. I don't know why that number just rolled off so slowly off my tongue. That's because the entire oil and gas industry is just getting absolutely shattered and demolished. So based on the theory of individually investing into just the winners of SCHD, your odds so far look pretty good, right? It's a 66% chance of investing into the right ones and a 33% chance that, dang, I invested into ConocoPhillips and I, in fact, underperformed SCHD. Let's go one more, right? Altria. This is one of my more favorite stocks in the stock market. Do I love their business model? No. Altria is in the business of tobacco. Ticker symbol MO, but you cannot deny their numbers, their historical performance, their fundamentals, their financials, their business operations. Dude, they just crush it. This is where I kind of separate my personal feelings and emotions from the business itself. Because on the personal side of things, dude, I hate them. But as an investor, dude, I love them. And year to date, you would be up by 14.51%. So the odds are now 25% picking the wrong ones, 75% chance of picking the right ones by just investing into the top holdings of SCHD. Let's go another one. Let's do Lockheed Martin. So that's going to be ticker symbol LMT. This is a defense contractor. They manufacture and produce jets, drones, anything to do with aircraft, right? Year to date, I don't know about this one. Let's see. Negative 4.21%. However, you would still be less into the red with Lockheed Martin than you would with SCHD by 2%. And last but not least, PepsiCo. I can already tell you that PepsiCo is probably going to underperform SCHD. because almost the entire food CPG industry has been just going on a massive sell-off. So it would make sense to me if they did in fact underperform. Oh, riddle me that. Negative 3.97%. So it looks like based on our current findings, 1 out of the 6 would have underperformed SCHD. The other 5, dude, you would be happy. Well, obviously with Lockheed Martin and PepsiCo, you would also be in the red, but not as deep. And then the other ones like Coca-Cola and Verizon and Altria, dude, you would be smiling. You would be up in the green, whereas SCHD, your portfolio would be in the red. So far, it kind of looks like it pans out, right? Investing individually into only the winners goes in your favor statistically so far. This is only the top 6. Obviously, we can make this video even longer and go to the top 10, top 25, top 50. If you want that, let me know. But now we're going to move on to the next experiment. So what we just learned is that in the short term, the individual winners within SCHD are doing better than SCHD itself. But what about in the long term, the long grand scheme, the bigger picture? Well, that's what we're about to do right now. So taking into consideration $10,000 invested into SCHD and the top 3 holdings on an individual level in the timeline of January 2016 to March of 2025, what happened? Would you have been better off with just SCHD, or are you better off with the individual winners? And as we scroll down to see the data, this is pretty surprising. So this right here is the starting balance. Now, with the share price appreciation, how the stock price grows or shrinks, but also taking into account the dividends paid out, that's what we get at the end of that timeline and the ending balance. Now, with SCHD, which is right here, that $10,000 would have transformed into $29,493. Now, if you look to the left, Coca-Cola definitely underperformed, right? If you look at their year-over-year compound annual growth rate, we're talking about 9%, which is still pretty good, but SCHD is 12.4%. And with Verizon, that 10 grand would have transformed into $15,000. ConocoPhillips, well, this is where the story gets kind of interesting, because not only did they meet the energy and the performance of the SCHD, but they actually outperformed them, because that 10 grand would have transformed into $29,544. You break that down year over year, it's 12.42%. And the kicker here is that the oil and gas industry has been absolutely shattered. At least it has for the past year and a half to 2 years. So if we rewind the VHS tape and go back like 3 years, dude, I feel like ConocoPhillips would have absolutely crushed SCHD. However, the reality is oil and gas is going to suffer, at least it is in the near term. So 1 out of the 3 would have outperformed SCHD in a span of about 9 years. Now that was SCHD versus the top holdings on an individual level. Now what about if we do this experiment again, but as a 3-man team of the ones that I think are the winners within SCHD? So they're not exactly going to have the biggest weighting within SCHD itself, but it's the ones that I think are the dividend compounders with mozzarella, with Parmesan, the good winners in my opinion. That's not financial advice, but just what I think. So the 3-man team is going to be Altria, the tobacco company, it's going to be Lockheed Martin, and it's going to be Cisco. Now SCHD does not have a lot of tech companies within its portfolio. Cisco is one of the few. What do you think is going to happen? And by the way, we're going to give equal weighting for the 3-man team, so 33% across the board. No one favorite over the other. So the timeline is going to be January 2016 to March of 2025. $10,000. Let's see what happens. As we scroll down, I'm going to be honest with you, Mr. Seahawk, I am surprised. I did not expect the results that we are seeing right now. Because the 3-man team, Altria, Lockheed Martin, and Cisco, that 10 grand would have transformed into $27,000 in that 9.5-year timeline. But with SCHD, that 10 grand would have turned into $29,400. Now, if we break it down year over year, SCHD is still going to be 12.4%. But for the 3-man team, comprised of the ones that I thought were the winners, dude, 11.3%. And the funny part is, yes, I have a recession haircut right now. The side of my head is like, the hair right here, just way too long. It needs to be trimmed. But the funny part is 11.3% year over year. Dude, that's still pretty stellar. That's a fantastic performance. 11%, dude, that's juicy. But 12.4% with SCHD. So I am kind of taken aback right now. I'm like, that is pretty crazy. But between you and me, I refuse to lose. So I think the culprit and the one that was weighing down the dream team right here, probably Cisco. So let me go ahead and replace Cisco with another holding of SCHD, which is going to be Home Depot, which makes up less than 4% of the portfolio itself. Now, let's see what happens. All right, Dream Team, exact same timeline. Please don't let me down. I think Home Depot is going to be the one that we need to push us over the edge to beat SCHD. Maybe we don't. I think we do. Let's see the results. No, we still underperform SCHD. The $10,000 would have transformed to the $28,400. So I don't know how else to tell you or spin it. Dude, SCHD, spectacular. Even when you try to hand select and carefully curate the best or the winners within SCHD to beat SCHD itself, you still can't beat SCHD. But I mean, the thought process of hand selecting individual stocks, it makes sense. Because if we go that route, you have the potential to outperform SCHD, but you really gotta be lucky. But more importantly, I think when you choose to invest into individual holdings within SCHD, like what you see on your screen right now, you get to invest in only the companies that you believe in. Now, when I said earlier that I really liked Altria as a stock, I know about a third of you hearing that, you probably rolled your eyes. You're like, dude, a tobacco company? Which means you can make your own SCHD without investing any of your money into Altria. So if you choose to embark upon the route of individual stocks within SCHD, you get to pick only the quote unquote winners that you think are winners while avoiding all of the losers. So it makes sense on a psychological and an emotional level. But the data and the numbers show us that you might be better off just going with SCHD. Now, hear me out. Even though I prefer investing into individual stocks to ETFs because I genuinely enjoy the research, the due diligence, the energy, the time, the dedication that goes into like picking and hand selecting the dividend compounders with cheese that I think are going to continue to compound. But just buying into SCHD, it makes sense because not only does it save you time and energy, it does all of the work for you. SCHD invests into over 100 different stocks that are across different sectors and industries. So you're diversified across the board. And the best part is, even though I might not agree with some of their holdings, every single one of these companies have a juicy dividend yield of at least 2%, most of them probably as high as like 4, 5, 6, 7%. And the part that is a scandal is that none of these companies within SCHD are REITs or BDCs or Yield Max or Round Hill ETFs. They're all qualified dividend paying companies. That's pretty remarkable. But I hear you. If buying SCHD is not an option for you because of where you live, based on the results, I think if you just invest into the quote-unquote winners within SCHD, like the top holdings are the ones that you have a high conviction for, I still think that's not a terrible route. You might underperform SCHD by a little bit, but it wasn't a huge margin like we saw earlier, right? 29,400 to that of like 28 grand. I mean, you're short by $1,000, but it's not like 29,000 versus, oh my gosh, my 10,000 only turned into 11,000. It's not like that ridiculous. You're still up there in that same echelon. However, this is not financial advice, but picking those winners, you think it's easy, but it's a lot more difficult and a challenge than you might think. It also takes a lot of time and luck because I assumed those three companies were going to be able to beat SCHD at least in the last 9.5 years, but it just wasn't the case. So I'm taken aback. These results literally have my hairline receding. I'm just like, dude, this is crazy. So what are my thoughts on all of this? I think if you go in the option of just investing into SCHD, it's the lazy but the practical approach. You get all the gains without any of the time, dedication, or energy required. You just know that it's a high quality dividend ETF and you just have to dollar cost average into it every so often, whether it's every 2 weeks, every month, or whenever you feel like it's a good price. Whereas on the other hand, option 2, picking the individual stocks within SCHD, it's more of a diligent and active management style. Because one thing that I didn't mention is if you choose to hand select the winners within SCHD, you got to stay up to date with how those companies are doing. Meaning you're going to have to tune in to the earnings reports, the earnings calls, check on the status of their financials and their operations, because you got to know when to sell. Because do you really want to hold on to a company as they're going through scandal after scandal and after setback? Because your principal value will go down by -40, -50%. So you got to know when to sell before they tank. Now, the disclaimer is, if you truly invest into a dividend compounder with cheese, they shouldn't be experiencing any of that turmoil and pain and fear. However, it happens to the best of us, right? You think a company like the would never face a scandal, and then come to find out their CEO is like a raging racist or something crazy like that, right? And then their stock price goes on a sell-off. You can't anticipate or put enough risk calculations into something like that. It's out of your control. It just happens. Scandals, setbacks, and recalls, on their products, it can happen at any moment. But here's where I'm trying to come from. Why do we have to pick just one style? Why does this car have to just go on road A, but not road B? Why not both? Because that's what I do. Because if you choose both methodologies and strategies, you get the best of both worlds. It's like day trading in the morning, right? Speculative growth stocks. And then at night, you do dividend investing. Actually, that's a really terrible idea. I hope none of you do speculative day trading. That's not financial advice, but I just think it's a stupid way to burn money in the stock market. But what I am saying is if I do buy one share of SCHD, then I'm also going to buy one share of Flowers Foods, which is included in SCHD. It's somewhere over here. A man of his word right here. Flowers Foods, ticker symbol FLO, and it makes up 0.16% of SCHD's portfolio. Something that you want to be mindful of is that SCHD has an annual reconstitution based on the Dow Jones US Dividend 100 Index that they follow by removing and adding stocks. And this usually happens once a year. But not only that, SCHD's holdings are rebalanced every quarter. So if you want to emulate SCHD and sell every single year to copy what they're doing, it's going to create a taxable event for those transactions. Just something to keep in mind. So anyways, what are your thoughts on the data and the findings that we saw today? Between you and me and the star that's right above my left nipple, which style do you prefer? Going just all in with SCHD, or trying to pick the winners within SCHD, or a little bit of both? All that to say, I love you guys. Stay safe. Good luck in the stock market, and I'll talk to you really soon. Peace.